Welcome back to Stocklabs for another market recap. We're basically all the way done with February at this point, so we've got a couple days left. But market had a bad week this week. We were looking for a little bit of an up move to start the week. Never really materialized. Kind of the selling started early in the week. Tuesday when we came back from extra day off, and some intraday bounces were attempted, but by Friday, everything was kind of closing decisively down, for the week. We did get some economic data that, like we've been saying, the economy is not cooling off. The jobs numbers are staying strong, the claims numbers are staying low. The inflation data has once again started to tick up as of Thursday or Friday of this past week, which is really what sort of set the market off on the path of having a bad week, or, you know, crystallizing that it was going to be a bad week. Um, we had the S&P down 2.7%, small caps down 2.9, Dow down 3%, Q's down 3%. Um, so, about 3% down on everything across the board. Bond market also got hit, down another 1.5%. We had said week before that, either week before or week before last, that rates were starting to push back up last few weeks, and they're getting kind of in that range of, being, it's time to be a little bit nervous about them busting loose again. I mean, the dollar has already kind of broken out for the year, coming, after having a big correction over a few months. Um, Bond market is kind of making a similar type move, and we've got 10-year up around 4%. You know, more rate hikes being priced back into the market after market kind of took them all off the table while it was trying to ramp the equity. So yeah, I mean, pretty bad week for indices overall. I mean, crude oil hung in, but like we said, like we've been saying, crude oil is kind of just it's doing nothing, right? So it bounces and it gives it all back right away. You got a flattish week for it this week. For our leadership stocks, ones that kind of give us an idea of how, especially the Nasdaq was performing for the week. They were in line with the Nasdaq, really. We had 3% down on the Nasdaq. We had 3% down on all of these. Nvidia had a good week, up 9%. Had a big pump on earnings. I guess the market was probably leaning short into the print, and ended up getting squeezed after the numbers didn't come in as too bad. I mean, I think the revenues have sort of stalled out in this name overall, but they weren't catastrophic for most recent quarter. Meta down 1.5, Microsoft down 3, Amazon down 3, almost 4, Apple down almost 4, Google down 5. Google is about to go red year to date. All these other ones are still hanging in pretty well. Tesla down 5, although it's up big for the year, up 60%, same as Nvidia actually. And Netflix down 9%, so pretty big drawdown. And this one is, I guess this is about what the Nasdaq is up year to date, maybe 7-ish%, 6-7%, or more. Could be 8 or 9. I don't know. But yeah, overall, pretty bad week for these names. You'll notice that most of them are actually underperforming the Nasdaq. So these names are trading heavier than even the indexes, um, which is really not too encouraging because this is where big money has to trade in big names, right? So big money wants out. They're doing it in these names. It's kind of like part of the reason why we look at these gigantic names all the time. Um, industry wide, industry wise for breadth, pretty poor across the board. So tech was down 4.3 on a median basis. Again, that's worse than the Qs. Healthcare down 6% on a median basis, which was the underperformer out of all of these industries. Basic materials soft, financial soft, consumer soft, industrial soft, services soft, all of these things kind of together. These ones in here, utilities, industrials, financials, consumer materials, they're all kind of market perform, right? Because indices were down 2-3%. These ones are down 2-3% on the median basis. So ones that underperform: tech, services, healthcare, really. And subsector wise, we've got nothing on the upside as far as breadth. So you're not seeing any money flow go into some sector that is providing some kind of either story or fundamental reason for money to favor that one over another. It was kind of like everything just was sold for the week. And on the downside, you see some healthcare stuff leading on the downside, EVs leading on the downside, silver, so precious metal type stuff down, solar. This was a very hot sector for a lot of um, up until maybe 3-6 months ago ish. I mean, solar was a lot of these were on big runs, but now they've kind of fallen apart. A lot of them well off their 52-week highs. So we got here. Okay, Chinese stocks have started to come unglued, and these ones had a big rally in December into January, kind of the same as the market, but they almost preceded the market move a little bit uh, as far as the Chinese stocks go. And we've got the overall, okay, this is 25. This is, I guess 40 sectors, or no, sorry, 35 sectors down um, over 5%, which is, I mean, it's not a gigantic number, but given that there was nothing, absolutely nothing up, you could tell that the um, the breadth was skewing heavily on the sell side across all sectors, industries, and whatever. So kind of examine this from just a market cap standpoint. Got 1 to 5 billion. This one, this one. Yeah, 1 to 5 billion down 3%. 5 to 10 billion down 2.5. 10 to 50 billion down 2.7. A lot of this stuff is lining up pretty close with the index performance. Got 2.56 on 50 to 100 billion and 2.65 on 100 billion plus. So it looked like everything 5 to 10 billion, it looked like all of these were about the same. Yeah, so if I check them all, the 2.62 average across all of them. We got, 2.56, 2.67, 2.56, 2.65. Yeah, so pretty uniform selling across the board, anything over 5 billion cap. Um, and then if we look at the intelligence for this week, got biotech, home builders, defense, Dow, oil and gas exploration. I mean, some of these are not that liquid of ETFs and represent like a little bit of esoteric sectors. Okay, we got cybersecurity sector in here. And I'm going to ignore these bottom ones down here. Okay, Labu's also biotech. But yeah, it seems like the market has kind of given up a little bit. Let's see on the downside. Okay, we've got Hibbs. This is some short high beta is bearish. We've got digital. Okay, this is something crypto related or blockchain related. Natural gas bearish. I think natural gas bounced this week, if I remember correctly. Um, may or may not be the final low. Most likely, people will want to sell into the initial bounce. So this kind of lines up. Natural gas bearish this week. Mobile payments bearish. Semiconductors bearish. So yeah, I don't know if this is bullish or bearish semiconductors, what this ETF is. I feel like this is a bull ETF, so bearish semiconductors this week. We've got bull PayPal is bearish, so bearish PayPal. ARK Innovation or ARK FinTech Innovation is bearish. Looks like it's going to be a nasty week for tech, or maybe not nasty, but just soft overall based on this stuff. Most likely, we've entered a period where there's going to be some wide range chop in the market. You know, the Bulls had every chance basically this week to push back up, make a move higher. You know, they had pretty good momentum from before the 3-day weekend, and more or less they didn't show up the whole week. And then the new economic data kind of caused more positioning to unwind, as opposed to anyone being interested in buying anything up around here. So the dip buyers are gone for now. You know, they're just either they're biding their time, they're waiting for some lower levels, or however people rationalize whenever it is they decide to buy. But this past week, they disappeared. Tape was dominated by sellers, you know, based on all the breadth data. And most likely we can see, you know, at least for the first half of this coming week, we'll see the same type of thing continue. You know, sellers will push the market down, you know, as far as they can, unless the buyers, you know, decide to put a flag in the dirt or whatever, however you plant a flag on, you know, some place, however the thing goes. But for now, sellers are in charge. You know, we haven't had, aside from the one day with um, you know, the Tuesday was a pretty solid down day, and then we had kind of recovered all of that until Friday. Everything gapped down and stayed down. There was no interest from the buyers to make another stand. So yeah, I would expect some more softness to start the week. Maybe we get a nice bounce intra week or so, but I think for the most part, you're looking at wide range chop, and yeah, we'll see if a new trend ends up emerging. But for now, there's going to be a lot of consolidation and back and forth action. So just stay on your toes a little bit and make sure that you're still around when the trend picks back up. Okay, so that's all from me. Hope you guys have a good week. Check back in on next weekend. We'll be into March, so spring is around the corner. And yeah, that's all. So talk to you guys later. Peace out.